Hi there, Serial Trader here. Let's check in with crude oil as there appears to be a trade shaping up here. I recall in the last video that even though the potential of a major top was certainly there, this wave count still looked like it needed one more 4 and then 5 up to complete the sequence. And so far, it's cooperated with that point of view. So 4-1 overlap, which would have invalidated this wave count. One was at 64.21, and 4 did not overlap. It only went as low as 64.26. So came awful close, but it respected it, and to me that's significant. We did not get that 4-1 overlap. And actually, if you look, it looks like we had a 3-wave decline, zigzag, sharp 3-wave decline. And now we appear to be reversing back upwards here. So, I mean, just to show it here, you know, you got your A down, B up, C down, something like that, okay? And just let me change the degree of that. Minuet. No, it should be sub-minuet. Okay, so something like that. So very sharp A, then a B up, and then a C down. And obviously C was shorter than A, and also less severe, although it was still sharp, but not as sharp. And we respected the 4-1 overlap. We didn't do it. So this can accurately, at this point in time, be labeled as a larger degree wave 4, larger degree than the subdivisions of this extended third. And now I'd say that the trade here is enter, really anywhere around here is fine near current levels in the 66s, and now we're actually getting above that daily T line too, so that's nice to see. Enter somewhere here and put your stop just below our bottom here. So the actual level is 64.26. So you know what? Throw your stop at 64.25. Why not? If this really is going to stick and be the accurate interpretation, then there's no reason for that to get taken out. And then we would be looking at somewhere in the well, at a minimum, take out this high. So that high was 72.88. So somewhere in, let's just say, the mid 70s, 74, maybe close to 75. Although a big picture wave count has to be reevaluated if you actually take out 70, 75, or it's very close to 75 anyways, high 74s. So you know, if you buy one crude oil futures contract, I think you're looking at $1,000 of movement for every $1 movement in crude, and obviously if you increase the number of contracts, that increases proportionally. So if you do 10 contracts, you're looking at $10,000 of movement for every $1 movement in crude. So really, what do we have here? We have a less than $3 risk, okay, and you're looking at maybe an $8-9, almost $10 reward. So that's a pretty good ratio if it plays out as I've laid it out here. And if you do get stopped out, if you get taken out, we take out the wave 1. Now we can start to be a little more confident that we actually have a significant peak in place, and then start to look for an entry opportunity for a bearish trade. But I think right now, I think it's significant we didn't get that 4-1 overlap, and we held this count as viable. To me, the probabilities right now are just one more leg up at least here, but anything can happen, of course. I think I'll be looking at the futures contract. I like the idea there. The option trade last time worked out quite well, but it's just not as precise as far as the risk management. I mean, the only real precision to the risk management is just the position size of the option contract, but as far as actually being able to use a stop or anything, forget about it. So in this case, I mean, crude always trades 24/5, and it's very liquid. So even overnight, if something happens, you'll get stopped out and get a good fill. So yeah, that's kind of what I'm leaning towards here. I haven't entered anything yet, but I think I'm going to quite soon. All right, so let's just see how this crude market plays out. I think there's certainly some opportunity here again. Till the next video, Serial Trader signing off.